Hey guys, hope y'all are doing well. Today is the Wednesday update of the week's trades in the options account. It's been a painful few days, I got to say. We'll talk about that as we go forward. But also, I have decided to, this being my last Wednesday update, what I will do is move them to Mondays. So, I'm doing that for a couple of reasons. One, it's easier. It's a whole. I'll be reviewing a whole week, Monday through Friday trades, and on Monday it will include the previous Friday's expirations, things like that. Also, it will alleviate some pressure on me because when I'm doing them on Wednesday, and I'm doing a up to Tuesday trade, I have to get it out that day. And sometimes, I got other things going on and it becomes kind of a push to put out the video. So we're going to be moving to Monday. So what I'm going to do is next Monday, I am going to do a recap of this week. Right. So some of it's going to be repeated. But at least that'll start us off fresh in a 5-day, standard Monday through Friday week. So, it also gives me time to do it, right? Because, Friday close, and I'll have all day Friday, all day Saturday, all day Sunday to put the video together. And then I can share with you, what I'm looking for during the week if I'm looking at anything. Currently, I'm not looking at anything except my portfolio going down. So let's take a look at what I've done and kind of what I'm planning to do here, because I don't have anything expiring for another till next Friday. Not this Friday, next Friday. So we'll just start off. This was from May 4th, and we'll talk about the closings here. And we'll come down here to May 4th. And here I closed my Bath and Beyond. There's one letter off there. My Best Buy put, I closed that out for 46 cents. Let me clear off the fees here. I always forget to do that because it gets confusing with all them numbers. So I made $83 there in 3 weeks. Didn't reopen it. Camping World, I took off my 20 strike, took it off for 40 cents and profited $60 there in 2 days. That was an earnings play, by the way. AT&T, I had a 19 put strike. I closed that down for 15 cents. So made after fees were high on AT&T for some reason. I always forgot about that. AT&T for Interactive Brokers, the AT&T option premium is ridiculous. I mean, the commission fees just on AT&T. Everything else is very reasonable. So $28 there in 24 days, and I took off the 18 put for 21 cents, made $18.45 there in 4 days. And then QQQ, I had a 300 strike. QQQ, I closed that down for $9.49. Realized loss of $799.40. So this is the first of probably quite a few rolls that I will be doing in the month of May. And the Qs, I have no problem rolling. The one that's going to be interesting for me is going to be this one, is ARKK. It's at a 57 strike. ARKK now I think is trading under $40. So I don't plan on taking assignment, but what I probably will do with ARKK, just to give you some heads up, is probably just roll a month out. If I can get $1 down in the strike, if I can get to a 56 strike and get a credit and a month out, I'll just continue to do that. Eventually, I think the market will turn. But as long as I don't get early assigned on it, I'll be fine to just roll. Same strike, just roll out in time. Same strike or $1 lower anyway. But right now, when I close these out, right, they're sitting on about a $9,000 loss if I were to close that out today. So when I roll it, if that doesn't recover at all, there will be a lot of premium cooking in this position, and I really don't want to add any contracts to it either. But I'll explain a little bit more as we get down because I opened up another trade on ARKK, and we'll look at that here shortly. So let's take a look at the open positions. Now, May 4th, I opened up a Camping World put. I moved that 20 strike up to 25. I got $150 for that out to June 17th. And that is a 45, it was basically a 45-day trade. And then QQQ, if you remember my 1111 trades, I did another one out to July 15th. And I bought a 314, sold a 308. So that's the spread part of it. That's the debit spread. So I bought this 314 and 308 put side. Okay. And then I sold the 250 and the 240 to finance that and get some credit. I think there was like 300, or was it 400? I forget. I can't do math right now off the top of my head. It might have been like $300 credit. But what that does is by July 15th, if this thing is trading at around anything under 308, it makes even more money than the credit that I received. If it's trading above 308 or even above 314, I'll get just the credit received from the whole thing. It's kind of a downside protection. So you make money if it goes up. You make money when it goes down, up until your first strike. So I'll make more money if the Qs go down to $250.01 on expiration. I'll make like $1,000 off of this instead of the 300 or whatever it was that I collected in credits. Okay. I did the same thing with ARKK. I did a short one though. I went out to May 20th. That's the same expiration that my big ARK position is holding. I'm holding. The reason why I'm doing this is I'm thinking if this becomes fully profitable, I can offset some of that and maybe even get the strike lower from the 57 put by using the profits from this to kind of offset it, if that makes sense. So what I did here was I bought the 45. I bought 345 puts. I sold 343. So that's the debit spread there, which is 200 wide times 3, that's $600. And then I sold 3 of the 40s and 3 of the 35s to finance it. Now this is already in the money, but we'll see how it goes. Like I said, you make full profit if it stays above 40.01 at the time of expiration, but you still make money all the way down to the 35s. Now I'll have to probably, sell this. See, what'll happen is this will be full profit. The debit spread will be full profit. This will be the 30. If it stays above 35, this will be full profit, and this will be partial or offset some loss. It'll be a loss, but offset by the gain in the debit spread. I know that's a lot to take in, but bear with me. We'll just have to see May 20th how this works out. But I'm trying to play the downside and get myself some protection and from ARKK, and probably use hopefully some of these profits to offset the big position in the 7 contracts I have at the 57 strike. Try to shrink that position a little bit is what I really want to do. And then finally, that roll of the QQQ. This is kind of what I see doing for a lot of positions that I have on, because almost everything is in the money at this point. But a lot of stuff I don't have a problem with taking, or I don't have a problem with rolling, except the ARKK. The ARKK is the exception in my portfolio where I'm like, I really have to worry about. But, like QQQ, I'll roll this all day. Like I rolled that 300 to a 298. And I don't even know why I did 298. I should have rolled it to the 300, Same strike. I just rolled it out to June 17th, and I collected an extra $475 in premium for that. So where'd that go? Let's look at that real quick. So a loss of 800, but I sold this one for 1424. So I have $1,423 in premium cooking on a QQQ put, 298 strike out to June 17th. Now I don't have to worry about that until June 17th. If QQQ's not above 298 by June 17th, I can just roll it another month, same strike, and collect more premium. Okay, that's it for the opens and closes. I know that was long-winded. Apologize for that. But let's look at the premium cooking and the demise, the horrible week we've had. So, week ending May 10th, we closed 5 positions. Open 4, profit realized negative 610.23. That's because of that roll of the QQQ. Premium sold big time 1,991.78. That's because of that 1,400 something in the Qs. Total premium cooking jumped up big time to $5,375.72. Now, if I roll that ARKK position as is, that's going to be huge. Because there's $9,000 probably of premium there that I'd have to make up. So that would be a pretty big premium cooking position. So that's kind of why I want to reduce that a little bit. I may even take some loss on it just so I'm not that exposed. Maintenance margin jumped up a bit, 42,100. Buying power usage 43.45%, 10% higher than it was. I think there's some risk adjusted additional maintenance margin being pumped in there as well. My cash balance went down slightly. I have been buying positions. I bought some JEPI, bought some of my closed-end funds. Yeah, that's about it. And then I did make a deposit, $177. Reason why is the account that I had connected to Interactive Brokers, I closed down. So I had to redo it to where all my cash is actually stored at. And it takes some time for them to recognize and approve the account. Like I put this in last week, it's still not cleared. But once it clears, then usually they will take deposits and let you have your funds available to trade immediately. But as of right now, it's in that approval process. No withdrawals. NetLick dropped huge, 112,100 previous week to 96,900. That's about like a 13-14% drop in 1 week. So that was a little rough. Return on maintenance margin, that's the profit of 610.23 divided by the maintenance margin used per previous week. That's minus 1.62. And return on net lick is the same profit number divided by last week's net lick, so down 0.5% there. So how are we looking year to date? That's looking ugly too. If we look 123.1 as I started January, and now we're down to 96.9, down 21.28%. That's a big move in 1 week. If you follow me every week, you'll know what it was last week. It wasn't that bad. I think it was like 9% last week or something like that. But I typically try to model my returns against the Russell and NASDAQ. So luckily, at least I'm at least beating them. But I was beating everybody until this week, and now S&P down 16.6% for the year. I'm down 21. Russell down 22 to my 21. NASDAQ down almost 26 to my 21. Dow Jones, the big winner, quote unquote, air quotes, down 12% for the year. So That's all I got. Like I said, I'm going to make another video on Monday to just finish out this week. And then from here on out, it's going to be every Monday on the options portfolio update. So hope you guys enjoyed. See you this weekend. For those that join the live stream, we do a live stream. I do a live stream every Sunday night at 6 p.m. Pacific. It's kind of just wide open. We do talk about stocks, but the conversation could lead into anything and everything. So if you're easily offended, maybe don't show up and just watch my other regular videos, because the live stream is kind of unhinged, if you will. So that's all I got for you guys. Hope you guys have a good week. Let's hope for some bounces here to be able to get out of some positions and reduce risk. We'll talk to you later. Thanks. Bye-bye. I am not a financial advisor. The information contained in this video is for entertainment and informational purposes only. It is not intended to be investment advice. Please seek a licensed professional for any investment, tax, or legal advice. Thank you.